All right, good morning, everyone. Good afternoon, depending where you are. You guys know, so I have family in town. My oldest daughter is here, my grandson is here. So, as I said last night on Twitter, my heart is full, right? So, I'm very, very happy. We're coming into a holiday week. So, first things first, Thursday we are off. All right, which means probably Wednesday is going to be pretty quiet. And then Friday, we're basically just trading in the morning. So, very short week. And so, what I have learned from short weeks is that there is low participation in the market, low volume, as you would say. And I wouldn't expect a whole lot, you know. But again, if you're one of those traders who wants to be in the action every single day, then we'll take part in that, right? So I'm going to be here just like I always am. We'll be coaching first thing in the morning. Remember here in the room, everyone, that we get started 30 minutes before the open. That way we have our plans and everything ready for us, okay? So please keep those things in mind. And most likely throughout the entire short week, we'll be finished about 90 minutes, at least for myself, as far as presentations go, what I'm teaching, all that good stuff. And honestly, that's where most of our money is made, as far as like SPX, iron condors, and butterflies and stuff like that. We could put those on. No need to really manage those. We kind of like just a set and forget trade if we take any of those this week as well. All right, so let's get into it. I promise to make it pretty short and sweet. I'll be going over all the normal things that I typically do. And the first thing we're going to be looking at here is this week's major U.S. economic reports and Fed speakers. So again, as you all know, this is what I consider noise, and that noise pushes price into supply and demand zones. All right. And we already identify those levels every single day. And then I teach you how to execute off of those. So again, this is just information that pushes price there. We don't sit on our hands. We basically trade into any sort of reports. It doesn't matter to me. It doesn't matter if it's earnings. It doesn't matter if Jerome's on the mic. All of these levels are already there. And this has been happening since the inception of the market. And we love to show you that proof of concept here at the Simpler Trading website. You can check us out. Just go to Trendy John. There's an About Us, and you can just kind of look for me and then look what I offer, okay? This week's major U.S. economic reports and Fed speakers, Monday the 20th. You guys can see here we have U.S. leading economic indicators, and Richmond Fed President Tom Barkin is speaking at 12, and this is all Eastern Time. Tuesday, November 21st, existing home sales, and then you have the minutes coming out as well at 2 o'clock Eastern. And then on Wednesday, we have initial jobless claims, durable good orders, and then consumer sentiment. And I like to highlight consumer sentiment because a lot of traders will get into, really focused on their time frames and their trading. And this kind of catalyst, and even this, you might be in the middle of early morning trading and not realize that consumer sentiment is about to come up. It's again just some catalyst that's going to most likely create a little bit of volatility in the market, so please be aware of that. And then on Thursday, as I said, Thanksgiving holiday, there's nothing scheduled. And then Friday, very short day as well, we have PMI. Okay. Moving on down here, I use earning whispers. The green highlighted names are those that I take debit spreads into their earnings. And if you haven't seen me do this, we had a remarkable last week using the debit spreads into earnings, several 200 plus winners and 200% winners. And so I would love to teach you how to do that. It's really straightforward using supply and demand levels. And the names that I'm looking at that I'm interested in is going to be Kohl's, Nvidia, Lowe's, Best Buy, Baidu, and then Futu. All right, so these are just the names, and sorry, John Deere right here. These are the names that I'm interested in using my earning strategy going into next week. Doesn't mean that I'll trade them all, but I'll definitely trade some of these. Coming on down here into last week's results. Again, I can't make this stuff up. You guys can see that the neutral strategy worked very, very well. We did have a big gap up, so it's not fair to say that, hey, you could have been sitting on the trigger and then buying over this. I mean, you could have, right? We did. I mean, the catalyst pushed price up. You could have been here on the trigger. The mechanical approach is once it moves over 443, you go long. All right. And over here on the QQQ 380.71, you go long. It never once broke down below the neutral. We had no reason to go short. And this is yet just another successful neutral strategy that I sent out to you in advance. Now, notice that over here it said the weekly IAD. That stands for inside and down, and there is a video right here on my YouTube channel to teach you the inside and up and inside and down formations. And notice that we pushed up into target 3. And notice here we did get a trendy turn signal. And after we got that trendy turn signal, that 451.71 basically became the top of the market. Great levels. They worked very, very well. And over here on the QQQ, pretty much the same thing. We come up and tagged our level at 388. We got the trendy turn signal, and you can see pretty much just sideways going into to the end of Friday. Okay, so again, great results. Let's move on. I'm feeling a little like, hey, I'll give you the levels. It's the holiday season. I told you guys last 2 weeks ago, maybe 3 weeks ago, that I was going to stop sharing these levels, and I will. But, it's right here in front of your face, so I'm going to go ahead and show you now. The room definitely gets these, but as far as like YouTube goes, I'm going to stop putting these out there. But they work really well. And this was designed, just so everybody knows, this was designed for the trader that doesn't have time to watch charts all day long. I know because I was just like you. If you're trying to learn, if you got a job, I was in the Air Force for 21 years. I didn't have a chance to look, all day long. And that was like an issue, right? If you're trying to learn how to trade, or if you're trying to just follow along with traders, but you have meetings, you have kids to take care of, it's really difficult to get to that. So I just want to make sure you understand this is pushed out like today, right? It's a Sunday, and the way that we trade this, and again, it's on my YouTube, so I won't waste any time. It takes about 4 to 6 minutes to learn how I trade this. I have a video. Please watch it. It's really straightforward. But these are your levels, and this is where I'd ask you to go ahead and pause the video, take those levels down, understand what the neutral strategy is and what our targets are to the upside and downside. Far as this week, I'll be getting into my sentiment a little bit later in this session, but we have imbalances in the market that I identified on the ES and the NASDAQ 4-hour charts that I'll show you here in a few minutes. I still am saying buy the dip, BTD, right? And what I mean by that is I would love to see prices come down into the imbalances that we have left behind. But again, price is king. And if my levels tapped, like say, hey, I do want this imbalance down here. But if we break over the 452.13, then I have to go long. That's my process. And then again, this would be my support to the upside. Okay. So again, those are the levels. And before I forget, please give me a like if you like this video, if you're watching it. So that means if I got 1,000 people watching this video and I only get 50 likes, then I'm honestly going to just stop doing this and push it out on YouTube. It doesn't make sense to me. All you have to do is just stop for 1 second and hit that like, just to show me that you appreciate the time that I'm taking out on my weekend to give you this free information. Okay, I'm going to go ahead and move on. This is SPY, bigger picture. This is the quarterly. This is really important. From here, I'm going to minimize this just really quick. And I'm going to bring you to, let's see if we could bring it up here. There we go, right there. I'm going to bring you to the actual trading view chart so you can see this. I'll read the notes really fast. This all worked out very well. Update, as far as today is concerned, the 19th. The SPY quarterly candle is now an inside and up. Targets above are the fibs within the supply zone, 454.77, 463.28, and support is the 446 level and the 442. Let me go ahead and show you what I mean by what I just said. So currently, all right, and we have 1 month and 11 days until the quarterly candle closes. So please understand that. But as of right now, price has went inside and up. I want to show you some very important details about this really easy to read chart. This cloud right here, we call this the trendy cloud. It has buy and sell signals in it. But really at the end of the day, it's an EMA cloud. When price is above it, we expect it to be support. When prices are below it, we expect it to be resistance. Keep it simple. When price came down into the cloud, we found some love there. Price then pushed up from here. We actually got a buy signal. And now we are actually going inside and up. So price did move over the previous body's candle. And what I'm saying when I talk about the targets, the Fibonacci's within the supply zone is here. Okay. And the supply zone I've broken into three sections, and that's by quarters. So 25%, 50%, and 75% of that zone. Your first target is 454.77, which we've already tapped. Okay, and these are resistance until proven otherwise, but they're still targets as we're riding to the upside. So, if for some reason the bulls can actually make a new pivot high, that'd be really promising that we most likely push towards this 75% and the backside of the supply zone. Now, I'm not saying this week, it's a really short week, but these are our levels. And then when I talked about the support at 446, what I'm talking about is that initial line into supply. Once you're in supply, this then becomes support. So what we say to ourselves is if this, then that. If 446 and a half can hold, then I'm expecting prices to continue to move towards that 454 and possibly into 463. And that is the SPY. Let's go ahead and move into, give me 1 second here. And we are going to pull up put that there. And we're going to move into the QQQ. And again, this is the bigger picture. All right, so we're going to bring this down and we're going to find our notes really quick. I'm going to read those to you. So far as today is concerned, the target was acquired. If you come up into last week, if you guys watched the video, it was currently an inside and up. Okay, target now is the YE at 385 plus. Let's use the future YE as near-term support and the 23.6 as long-term support. This week, as you can see, target has been acquired. We did hit the trendy edge, which is my proprietary indicator that identifies supply and demand. And support now going into this week is 374 by 362. Again, these are going to be wider, right? This is not an intraday type of trade. This is for my traders, who are focused on the bigger time frames. They want to be on the right side of the trade. So your levels are going to be a little bit wider, but your position is going to last longer. So again, 374 by 362 is going to be your support. If you want to say, well, John, what is my, weekly support? Then use this number, that 374. And as far as like the monthly or the quarterly, I would use the 362. Our targets to the upside as of right now are 396 and 400. And once again, you can see that the cloud is very nice support. We had a buy signal. We ended up going inside and up right here. We hit that trendy edge, and as far as the targets that I am identifying are going to be the top of that body there and the back side of that supply zone. And right here, that 362.11 is your support, and then using the 23.6 right here is also your support. Those are your levels for the SPY and QQQ. All right, let's keep on moving on. And we are going to pull up, let's pull up this here. And we're going to move this down. All right, so we just went through the SPY and the QQQ. And again, we do this every week, same stuff. And I've been doing this. I tell everybody, if I didn't do this broad market analysis to myself, I'd be absolutely lost. Seriously. These are what I have found over the years to be the most important thing on reading the market. I will tell you with 100% confidence that I am amazing at reading the market. But I'm not a perfect trader. There's times when I read the market amazing and I still trade it completely opposite of what I actually saw. And that is just something that we as traders struggle with at times, but I love being transparent with you. All right, so please understand that. Trading is not easy. All right, so, well, I do think that here recently, a lot of traders probably think that trading's easy, but that's okay. Because we'll all be humbled in time. That's what happens. We're going to go to the DXY or the dollar. The biggest support is around 104 to 103. I'm going to take you into a weekly chart. We do not use a quarterly on this particular chart as of right now. Everything is happening as I've been teaching you over the last several months. This was a supply zone that we found. I said I expect resistance here, but not guaranteed. Price did move up into the supply zone, and this is why it's so important to understand this stuff. And the dollar drops from the supply zone, like this is what we expected. It wasn't guaranteed, and as it dropped, and you can see over the last 3 weeks, see, it hit supply. And I keep going back to Orlando. I told you I was at the money show, and I was talking during the Simpler Summit, and the big thing is understanding supply and demand and risk and all that stuff. But the masses were absolutely bearish, and it's sad to me because if you're falling on the wrong side of really like understanding how to read the market, I highly encourage you to learn about supply and demand. Matter of fact, I think anyone who does not have supply and demand in their arsenal, right, your tool bag of trading, you are missing out on the most, I believe, the best strategy out there. This right here let us know way in advance that the market was going to turn and push to the upside. Timing is the variable, but as you could see, we hit that supply zone. We pulled back. Once we started to go inside and down here, and again, you can watch that video, it was time to get long in the market, and we were exactly that. For the last 3 weeks, the SPY has moved the ES has moved 400 points, and the SPY has moved $40. So if you're reading the market wrong, and you're convinced that we have to crash or something like that, you just missed out on one of the best rallies this year, and that's sad to me. All right, so please, if I'm not reiterating it enough, make sure you're learning supply and demand. As far as this dollar is concerned, I told you in the room once we broke the cloud here to be looking at hold my beer. The market still wants more, and the market did give us more. You could see that the dollar continues to drop here. We could find support around 103.5 and the 61.8 Fibonacci at 102.62. As long as the dollar stays under 104.39, just call it 40, then we continue to rip in the market to the upside. All right. But if we find a little bit of bounce here, just understand that the market needs to digest these bigger moves. This is the overall blueprint of the dollar. It's a beautiful thing for the bulls. And if you're a bear, what you want to see is for the dollar to get back above 106. It has created a supply zone here. So even if, let's say it comes down to the 50 and we move up, the market will move down a little bit, it will digest, but as soon as we get here and you start FOMOing into the bear positions, understand that the dollar will most likely reject right in this area around 105. Okay, you need above this structure in order to feel, I would say, extremely bearish, if that makes any sense. Okay, all right, let's move on into the 10-year. Okay, we're going to go to the TNX. All right, and again, these are updates on a weekly standpoint. You can see now I've created a demand zone here for you. So please understand if the TNX gets in here, we could see the TNX then start to bounce. It looks like the dollar. All right, it came up into a target for us. It's moved back. It's creating a supply zone here. So again, I'd rather see the TNX pull back to around 4.343 or, 4.4, and then you might see a bounce. So once that dollar and the TNX start to bounce, I would be cautious on your long side. Okay. All right, that's all I have as far as the 10-year is concerned. Now let's go into the SKEW. If you don't know anything about the SKEW, just look it up on Google. All right, you can find out what it means, but basically these are our hedge funds that I'm tracking and looking here, and you can see we have these extreme levels: protect, risk off, and risk on. And when I give you all this information, you start putting it together, and you really start to understand how important all this stuff is and how it has confluence. All right, and so we're going to put all that together. All right, so notice that we are hanging up here towards the protect risk off, and this can be frustrating. This reminds me of 2021 when the market was extremely bearish or bullish. Sorry, I think it was 2021, and a lot of traders were calling for a pullback, but the SKEW stayed very, very high. What is really interesting about this year, and I love studying this stuff, is that we're in a pocket here. See, in the past, for many, many years, when you come to extreme levels, right, basically what this tells you is the max participants are on the call side. All right. And when max participants are on the call side, you're looking for a rug pull in the market. When prices fall all the way down here, not prices, sorry, the skew falls all the way down here towards this 114 to 112, even 124 right in here, then this is when max participants are on the put side and you're looking for a move to the upside. Notice here for the last several months, matter of fact, if you come back here, we're talking April. We've been in this like really tight range, and you're probably thinking like let me show you a picture that kind of helps you understand here in a minute on the fear and greed what this is really, what this how this really can be read by you. Okay, but before I do that, the protect areas are fluctuating, right? Just between right in here in the protect areas, right? The skew is fluctuating in here, all right? Between bearish and bullish. In my opinion, we stay within here this year and we see a more extreme level in early 24. So either here or for some reason we break above here, which is very uncommon. Okay. That's what I'm looking at going into 2024, especially with like elections and stuff like that. All right. Now, the next thing I want to show you is the fear and greed. All right. The fear and greed is at greed. And what I was saying is, let me show you what I'm talking about as far as skew goes. What's happening is we're just kind of doing right in here to right in here, right? It's very rare this year that we're getting extreme levels, okay, over here, and then getting the big move that takes us over here. We're just fluctuating. All right. Again, just fluctuating, and you really got to be on your game, understanding the levels of supply and demand and how we are going from these extreme protect, right? Risk off and then risk on. All right. And that's why I do this weekly, week to week with you so that I can give you this week's projection. All right. So please. All right, ES futures, this is where it all comes together for me. This is where I read the market extremely well. And I'm going to start this with the ES futures. Just like always, I'm going to start with the weekly. Notice that we have pushed up into this inside and down. I want to read this to you and then we'll continue. My notes for this week. The turn signals worked for another 100 points. And if you remember last week, I said look for 30 to 70 points. That's how much more we could run to the upside. And that's exactly what happened. We ran into the supply zone. Now, the 44.90, I think, is where I was getting my math for the 70 points. And you can see we went past that. It's okay. Not a big deal as we were net long. Now, as far as this week is concerned, the next target is going to be the backside of the zone. So around here, 45.64, and this is going to be your support at 44.90. All right, so as long as 44.90 holds, I'm looking for 45.64, and if we get above 45.64, then we're looking for the the support here at 45.64, and then looking for 46.32, and then this blue level here at 46.57. Okay. So that's what I'm looking for. We did get the 3 white soldiers. We went from white momentum to green momentum. The market's really bullish. And again, if you were bearish coming into the last 3 weeks, it's okay. Like, get your head up, pull your chin up. Just understand that like trying to call these tops is not really working for a lot of traders. Be unbiased. Try to be bullish and bearish when it's the right time. Again, folks, bullish when you come into demand zones or trendy levels or the fib of 618, and then start to back off on your bullishness as we're into supply zones. And as I said last week, it doesn't mean I'm not going to go long. That's exactly what we've been doing. All right, we're just riding the wave. That's it. And I'm sure if you're looking at these charts and you look here, you're going, man, we're really extended, right? So here's the 9 EMA. That's where price is. Let me make that yellow. That's really getting lost there. Right here. All right. So it's pretty extreme. And you would have to think that price wants to come back into those lower time frame demand zones. And I talked about those earlier, and I'll be showing you those here just in a few minutes. This is going to be your daily. All right, we have new buy triggers, resistance level, and short trigger. I'm going to put the short trigger way up here at 46.58 because again, This level right here is the biggest level for me. And as far as buy triggers where they're coming in, I just use some Fibonacci's, but I'm also paying attention to the imbalances in the market, and I'm paying attention to the cloud. Again, when prices are above the cloud, we're looking for them to be support, and when we're below them, we're looking for these levels to be resistance until proven otherwise. Okay. Let's go ahead and go into the 4 hour. In my opinion, this is where it's at. All right. The question is going into this weekend, or sorry, this week, the short week, ES and the NASDAQ. The question is, does the 4 hour hold the cloud? What I have found in my studies over the years is that you really want to take it and look at it from kind of like a top-down approach. Well, this is a little bit opposite. As we get into the supply zone, I want to be fast. I want to understand what's about to happen. And if you're looking at a weekly and a daily, that's kind of difficult to do because I need information right now. And so what I do is I get the smaller time frame, and notice that on those other charts that I was showing you that were really above that cloud. See that? And then on the weekly, we're really far above the cloud. Well, that doesn't really help me. All I can take from this information is that I'm in a supply zone and I could see a pullback. And so I come into the 4 hour, and you can go to a 1 hour or 2 hour. And as long as you have these indicators, right, and these can help you, is that this cloud is support until proven otherwise. Well, the 4 hour, as you can see, is just barely hanging on to the 4 hour, the 9 EMA. That's what this is right here. It's a 9 EMA. If we start to break down below that 9 EMA and stay under there, then we most likely pull back to this EMA, then this EMA. Then I want to know where the demand zones are so that when price gets there, we can take action. All right. So again, during this entire move up, we've created imbalances in the market, and these levels that I have here are my most important levels to the downside. So again, I said buy the dip. I would prefer to buy the dip in these zones, but if again, doesn't mean we have to get there. We have some big names coming up for earnings, and we talked about that a little bit earlier, especially with NVIDIA. It's going to have an impact on semiconductors and so forth. So please understand that, right? Like, if we get a little bit of a pullback this week, don't get extremely bearish. Just understand, for me, I'm looking at these clouds. I'm understanding where the imbalances is. So when you come in the morning, know where your high is, okay? So it's if this and that. If the high is not taken out, perhaps we're breaking down into the other levels that I've presented to you, okay? I hope that's not too much information. Again, we teach this every single morning, and then you understand exactly what we're looking for. So just to kind of put your mind at ease, is that if you're new and you're listening to all this information, it's like overwhelming. But just know that every morning we do a intraday chart, and these are the ones that I put out on Twitter sometimes. And we have targets. Like this was from Friday, right? Again, I can't make this stuff up. We moved down into target. All right, price then moved up. It hit the upper target and then came back down. So again, this is what your intraday looks like every single day. I coach through this, so don't worry. We do that as well. NASDAQ. We're over here on the weekly. What's the difference? Well, we already pushed through the backside of that supply zone, right? And then we came back. As a matter of fact, if we go into last week's notes, I said from last week, still important. Price has pushed into the already tested supply zone and made a new pivot high in here. There's also a new trendy turn signal, and I'm reading you notes from last week. Okay. The big takeaway for me is the story I always tell. We are now in a supply zone, the bear house as I call it, and the bears can kick you out anytime they want. But as long as price can hold the 15,320 level, the entry into the bear house, and that's this level right here, this is the entry into the house, if you will, the bulls have a fighting chance, but in order for them to escape, they must pass through the back door. That would be the trendy edge and the backside of the supply zone. Notice they passed through, but they didn't close outside the back door. So on Friday, they're still in the house. Those rules still apply. It's not until we start to build value above, and I apologize, we're just about 4 points over it, so we're just above it. But it's not until price can build a base here. I would like to see a 4-hour base being created above that 870 level, and then I think we continue to push up here towards 16,278. Okay, trendy turn worked very well, just like on the ES futures. That was awesome. And as you could see, the overall trend this year using the trendy banners has been extremely bullish, even when most traders were extremely bearish. Overall sentiment for me, buy the dip, not BTFD, not buy the freaking dip. So what I'm saying is I'm kind of changing my tune a little bit. This is about being with family and friends this week. A lot of traders, I feel like, lose sight of that. It is healthy for you. It builds strength in you to be able to walk away from the screens and enjoy that family time and friends time. I really highly encourage you to do that. We'll be here every single morning, but I'm going to tell you straight up, as soon as we're done with the 60 to 90 minute session, I'm spending time with friends and family, hanging out at the pool. I've heated up the water. It's beautiful. The weather's in the 70s today. We'll be out on the water. Just take it all in. Trading is fun. I want it to be fun. I want to give you the best levels out there. I want to give you the best methodology out there. And to me, that's the trendy methodology. Trading is not easy, but let's go into 2024 stronger than ever. I'm just so happy to be here and be your mentor and your coach and your friend. I'll see you tomorrow morning. I cannot wait to trade with you.